Congratulations! You found the Pirls Stock Market Commentary for market week ending Friday, January 23rd, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio rose from 0.65 to 0.84, still within bearish territory. The total count of securities in bullish or bearish patterns rose 1% to 2,576. The count of bearish stocks decreased 9%, while the count of stocks in bullish patterns increased 17%. The Pirls PNF Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 67 points for the 9th decline in 14 weeks. At a negative 151.78 points, it continues below all 9 tops above plus 100 and above all 6 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. Momentum. 1 week ago, on Friday, 1/16, the CCI 20 Daily had 6 consecutive days below zero to begin a Woody's downtrend. Now, at plus 65.44, the CCI 20 has 2 consecutive days above zero and is outside the plus or minus 50 range for a valid zero line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 28 weeks ago, while the daily CCI 20 began a Woody's downtrend 1 week ago. The possibility we mentioned last week that the CCI 20 at plus 26.73 becoming the pivot of a valid zero line reject long entry signal has now taken place. We will continue following the result of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive and all of the bottom 5 are negative. Bullish, REITs continues in the top 5. Oil services continues in the bottom 5. Networkers have left the bottom 5. Bearish, banks, disk drives, and brokers continue in the bottom 5. Semis has entered the bottom 5. Gold and silver continues in the top 5. Focus this week from King World News. Man who predicted collapse of euro against Swiss franc makes second terrifying prediction. Quoting from the article, the ECB is now pushing on a string because, sadly, printing money is the only thing they know how to do. As it becomes clear that this new money printing program is also a failure, the ECB will then accelerate the money printing. This will have the effect of rapidly debasing the purchasing power of the euro, and it will also lead to even more chaos in Europe. We don't yet know what the total losses amount to in the aftermath of the Swiss National Bank's historic decision, but we know they are enormous. The Swiss franc skyrocketed in seconds, and the losses around the world are staggering and have already been sufficient to bring down foreign exchange houses and hedge funds. But the losses are impacting the bigger banks and the central banks as well. In the coming months and years, the SNB will have to reduce the size of its balance sheet, so they will need to sell their euros and buy Swiss francs. This is going to have the effect of further strengthening the Swiss franc, which will put even more pressure on the Swiss economy. So it's a vicious circle for them. This is what all central banks have done. They've trapped themselves in a corner. They have zero or negative interest rates. They are printing more money, and they are buying more assets that they can't sell and that are worth a lot less than they are paying for them. So every single central bank in the world is bankrupt because they will never, ever get the price for their assets that they paid for them. This is why the financial system will not survive, Eric, and a total global collapse is now in front of us. Thank you for tuning in for this week's Sand to Pearls Stock Market Commentary, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that in light of that article, you have an exit strategy. Hoping also that you are enjoying a peaceful and pleasant weekend, that you have a wonderful week coming up, and wishing you true success.